Thank you for inviting me to the World Knowledge Congress. I want to particularly thank MBN and Mail Business Newspaper for having me here to talk to you about emerging markets. I intend to talk to you about how emerging markets are being impacted by the global economic situation, both in Europe and the United States, and also how the emerging market companies around the world are becoming more active in the developed countries in terms of their investments, in terms of their trade and other operations. So I look forward to hearing what you have to say as well. And thank you again for inviting me to the World Knowledge Congress. As regards to the impact of the European crisis on emerging markets, we're finding that in the last 10 years, the percent of exports from the emerging markets to Europe and to the United States has been going down. It has been declining. That, of course, has been beneficial in the face of this crisis that we're seeing in Europe. But we must also remember that the U.S. continues to grow, the economy continues to grow, although at a slower pace. In the case of Europe, some of the countries in Europe are doing fine and are growing. So overall, the economic situation is rather flat. That means that they are still importing, they're still trading at a slower pace, of course. So we believe that the impact of this European so-called crisis, which I believe, by the way, is going to be solved in the next few years. They will work out a good program to have more economic discipline. But in any case, with the slowdown in these economies, emerging countries will be trading more amongst themselves and will be depending more on domestic growth as we go forward. The global outlook is very, very positive in our view. And the reason is that the impact of the internet, of communications, is having a tremendous effect on emerging countries, and particularly the new frontier countries in places like Africa. We are finding that the acceleration of information flow will mean that productivity globally will be expanding at a very fast pace. That, of course, is helped by other operations that are taking place around the world, and particularly when it comes to trade. The World Trade Organization has been very successful in bringing in more and more countries to agreements for free trade. Of course, there have been a number of bilateral agreements, but more and more multilateral agreements are common. For example, recently, Russia will be joining the WTO, and that will, of course, mean that trade and investment with Russia and the rest of the world will be growing at a fast pace. This is true of other countries, particularly in the emerging areas of the world. So we believe that the outlook for the global economy going forward is very positive. The European situation worries a lot of people, but in fact, what is happening in Europe is something that is quite positive for not only Europe, but the rest of the world. Because what it is doing is addressing the issue of governance at the state level. Governments around the world have been spending too much money on government operations and not enough room for the private sector. So as we go forward, you're going to see a reform in government spending and the attitude of governments towards the private sector, which will be positive. That, of course, will gender greater productivity and faster growth. The good news about Eastern Europe is that the bad news of Western Europe is impacting the Eastern countries, in the sense that these Eastern countries are seeing what's happening in Western Europe and realize they cannot do the same thing. They cannot move in the same path. In addition, the problems in Western Europe means that the money that was previously available, the investment that was previously available for Eastern Europe is not there, which means that the Eastern European countries will have to stand on their own 2 feet and will have to now make the reforms that are necessary. We have a lot of experience in Eastern Europe. In fact, we have a very big operation in Romania. We're managing the largest fund in Romania that was established to compensate people who lost their properties during the communist period. This fund, worth about $4 billion, is investing in Romanian companies, and we are now in the process of reforming these companies from being loss-making, state-owned, state-operated into private sector companies. And it's having a very, very big impact on the entire economy. And that process that we're seeing in Romania will be duplicated in other parts of Eastern Europe. So we believe what's happening in Western Europe is going to have a long-term positive impact on Eastern Europe. The BRIC countries, BRIC, Brazil, Russia, India, and China, are all huge economies, very large populations, and very different. On the one side, you have India and China with over 1 billion people each, with lots of consumer power and a vast consumer operations that are going to provide lots of opportunities for companies, multinational companies as well as domestic companies. And then on the other side, you have Brazil and Russia, who also have active populations, but not as large as China and India. But most importantly, these two countries are rich in resources. Russia is very rich in all kinds of mineral resources and also has food resources. A lot of people don't realize that Russia is a big producer of wheat and other crops. But Brazil is really the breadbasket when it comes to food production. Brazil is the largest producer of sugar and ethanol from sugar. They're a producer of many, many other crops and that feed the rest of the world, whether it be soybeans, whether it be rice, whether it be other products in the agricultural area. But Brazil also is very big in mineral production and is one of the largest, if not the largest, exporter of iron ore in the world. Recently, Brazil discovered huge resources offshore in the oil areas where they are drilling very, very deep into the oil sectors offshore, which will produce billions of barrels of oil in the coming years. So this is a very dynamic situation that is providing tremendous growth opportunities in these countries. We believe that the BRIC countries will continue to grow, some at a faster pace than we're seeing now, and will provide wonderful opportunities for investment. Now, on the periphery of these BRIC countries, you have other countries that are equally dynamic. Turkey, for example, right on the edge of Europe, is providing a lot of materials and products for the European market, but also has very close relations with the Middle East, being a Muslim country. It's a fast-growing country, a very dynamic population, and a good consumer arena for us to explore. Then you have South Africa, which is rich in mineral resources. Recently, they've had lots of problems with labor relations simply because the labor rates are quite low and the economic conditions of a large part of the population is not as good as it was expected to be after the end of apartheid. So we believe that reforms in South Africa will result in much faster growth. But more importantly, South Africa is becoming a launching pad for growth into the rest of Africa, north of South Africa. So we're seeing many of the companies in South Africa going into the rest of Africa, whether it be Nigeria, whether it be Botswana, whether it be Kenya or Ghana. These are all going to be benefiting from the know-how that has been developed in South Africa, because in many sectors of South Africa's economy, the operations are quite sophisticated. So we're seeing a very good opportunity for us to invest in these South African countries that will be going into the rest of Africa. In Asia, Thailand is probably the most exciting at this stage, as well as Indonesia. Both of these countries are growing at a fast pace, have potential for even faster growth, and are benefiting from what's happening in Southeast Asia generally. The ASEAN group is becoming stronger. Countries like Indonesia, Singapore, Malaysia, Philippines, Thailand, Vietnam, all of these countries are now coming together to form a trade and investment union, which together will be able to compete very successfully with other large countries like China and India. Of course, trade between the ASEAN and China and India will be growing as well. So free trade agreements I mentioned previously will be important for this part of the world. Generally speaking, commodity markets will be trending upwards in the next 10, 20 years. The reason is very simple. The demand, potential demand for commodities is increasing at a fast rate as per capita income grow, particularly in the emerging countries like China and India, where populations of over 1 billion each will demand more and more commodities, whether it be minerals, whether it be fuel, whether it be agricultural products. Recently, as you know, there has been a real problem with the corn production in the United States as well as wheat because of drought and other weather conditions, which means that production will be lower than expected. In addition, a lot of these crops have been converted into ethanol for burning into automobiles to combine with gasoline and diesel. So you have a problem where more and more food production, whether it be sugar or corn, is being used for fuel rather than for food. That means, again, the demand will be increasing at a fast pace. Ethanol for use in automobiles is now competing with gasoline and diesel in terms of price as oil prices move up. So what we're going to see going forward is an increasing demand and therefore higher prices in these commodities. Now, of course, from year to year, there'll be lots of fluctuations. You'll see an increase one year, a decrease the next year. But don't mistake that for the long-term trend of increasing prices. So we must be ready for the situation. Now, what does that mean? It means that we have to increase productivity, particularly in the food area. And that will require more fertilizers and more genetically modified seeds. Now, I know a lot of people are against GM seeds, but the reality is that if we're able to meet the needs of the growing populations around the world, it will be necessary to increase production. And that means lots of technology applied to not only seeds, but also fertilizers and other methods for increasing production. If we look at the trends in minerals, the same thing is true. We're seeing increasing costs as governments around the world demand more, a bigger share of the income from mineral production, and as workers in the mines demand increasing wages. That, of course, means costs are going up, whether it be gold production, whether it be copper, whether it be iron ore. Any mineral of this nature will require higher and higher costs. And of course, that means higher prices. So you can be sure that over the long term, commodity prices will continue to rise.